This video is for educational purposes only and is not financial advice. Always do your own research or consult a licensed financial professional. Links and resources are available in the description below.
All right, let's dive into the U.S. housing market outlook for 2026. There's one massive question that seems to be on everyone's mind.
Is this the year, is this finally the year the housing market sees that big crash we've been hearing about for ages? Well, to figure that out, we can't just look ahead. We actually have to start by looking back at what just happened.
So, let's set the stage. We're going to rewind a bit and look at the hard data from 2025. Did that crash everyone was bracing for actually materialize? Well, the numbers tell a pretty surprising story. Instead of a crash from November 2024 to November 2025, national home prices actually went up by 0.7%. Now, sure, that's not a huge jump, but it is the complete opposite of a collapse. But a national number never really tells the whole story, does it?
And that's exactly right. When we zoom into the 300 biggest metro areas, things get a lot more interesting. You can see here that prices actually rose in 202 of them. That's more than 2/3, and only fell in 98. So while some local markets definitely felt a pinch, the majority, well, they kept on climbing.
So what in the world is going on here? As we look toward 2026, there are really two gigantic forces at play: what the Federal Reserve is doing and these stubborn inflationary pressures.
In this slide, this breaks it down perfectly. It's like a chain reaction, right? The Fed lowers interest rates. Suddenly borrowing money gets cheaper. What happens next? More people jump into the market to buy a house. And when you have more demand, boom, you get upward pressure on prices. It's classic economics in action.
But it's not just about how cheap it is to borrow. The other side of this coin is the money supply itself. The Fed has cranked the money printer back up to the tune of $40 billion every single month. And you know what happens when you have more dollars chasing the same number of houses? It's just a textbook recipe for inflation. And all of this, it brings us to what might be the real story for 2026. Maybe it's not about a crash at all, but about a very real, very persistent affordability crisis that just keeps getting deeper.
At the very heart of this crisis is this gap between what we earn and what things cost. Now, officially, the numbers say that wage growth and inflation are both 2.7%. A wash, right? But here's the catch. Even the government has admitted there are problems with how they collect inflation data. That makes you really question that number. For most people, the reality on the ground is simple. Their paychecks just are not keeping up. By the way, if you're finding this overview helpful, please consider subscribing to the channel for more concise market updates like this one.
And the real-world impact of this affordability squeeze is just stark. First-time homebuyers, who should make up about 40% of the market, now account for a mere 21%. That is an all-time low.
And because so many are getting priced out, the median age of a person buying their first home has now hit 40 years old. Think about that. This isn't just a statistic. It's a huge delay in a major life milestone for an entire generation.
So, with all that said, what should we be looking for next? Let's turn to the forecasts for two of the most important pieces of the puzzle: mortgage rates and housing supply.
When you look at what the big institutions are predicting, you see a pretty clear consensus. All the experts expect 30-year fixed mortgage rates to end 2026 somewhere around 6%. The takeaway here, that era of super cheap money, it's not coming back anytime soon.
This all leads to the obvious question that everyone asks: if affordability is the problem and supply is tight, why don't we just, build more houses? It sounds like such a simple fix.
But the reality is that home builders are stuck in a total perfect storm. The costs for materials and labor are through the roof. Tariffs are making their supplies even more expensive. All of this means the final price tag on a new house is often just way too high for an average buyer, which, of course, creates this vicious cycle where builders have less incentive to build even when we desperately need them to.
So if there's one thing to take away from all this, it's this. The whole debate about whether the market will crash might be missing the point entirely. The real central challenge for the housing market in 2026, and probably for years to come, is this deep, stubborn crisis of affordability. And it's being fueled by some powerful forces that don't show any signs of slowing down. Thanks for watching this video overview on 15-Minute Invest.